first question 16A from DK Goel of chapter retirement, where we have talked about revaluation. With that, we will be moving on with more questions today, and I will be trying to solve question number 18 of the textbook. Keep watching.
Now let us read the question, which is question number 18 of DK Goel, in which there are two partners, Ram and Sham. The balance sheet is given on 31st March 2020, and you can very clearly see the liabilities and assets are given. In the liabilities, you have Ram's capital and Sham's capital, which is given as 30,000 and 27,500 respectively. You have a reserve of 6,000, you have employee provident fund 500, then you have creditors of 10,000 and net profit of 6,000. So therefore, their reserves and net profit are internal adjustments which has to be done, which I will do. Next, we have the assets, and we have the plant and machinery 50,000, patent 2,000, stock in trade 23,000, debtors 4,000, cash 1,000, and total of both the sides is 80,000. Now, who has retired? See below, Ram retired from the business on 1st of April 2020. Goodwill is valued at 10,000. So, if the goodwill of the firm is 10,000, individual goodwill will be 5,000 each. Please see very carefully. No profit sharing ratio is given. Therefore, the profit sharing ratio will be treated equal. The patents were valueless. Plant and machinery is to be depreciated by 10%, or 10% of 50,000 will be 5,000. A provision of 5% of doubtful debt is created on book debt. Book debt is the other name for debtors, and if you calculate 5% of 4,000, it will be 200. Assuming that these adjustments were duly carried out, show the capital account on the balance sheet of Shivam after Ram has been paid off. Sham borrows money from the bank on security of plant and machinery to pay off Ram. This is a very important statement, which you can see that Sham has actually borrowed money from the bank and given plant and machinery as a security. So you can see already 1,000 rupees is there in cash. That will be paid first, and then the remaining amount of money will be borrowed, and it will be paid off to the retiring partner Ram. Here another thing has to be understood very clearly, that the question has not asked us to pass any journal entries, but before making the capital account, it becomes important that we make the revaluation account to understand the profit or loss on revaluation. We should also do the internal journal entries, that is important, and here there are two internal journal entries. One is for reserve and the other one is for the net profit. So let's get started.
After reading the question, we have come to know that in this case, we are not asked to pass the journal entries. We are asked to prepare the revaluation account, partners capital account, and the balance sheet. The question has very clearly mentioned that there are two partners, Ram and Sham, and Ram has retired. These two partners are equal partners. As you can see, there is no profit sharing ratio is given. So before starting the revaluation account, we should always analyze the balance sheet and see if there is any accumulated profit or losses in the balance sheet. And if you see very carefully, there are two items in the liability side of the balance sheet. One is the reserve, which is 6,000, and one is the profit and loss, which is also 6,000. So these two internal entries should be first done, and as you know, the journal entries for both, I'll be writing it below the revaluation account, and then we'll get started with the revaluation account. The first entry over here, there are two partners, Ram and Sham, and they are equal partners. There are two internal entries. Let us do those first. The first entry is reserve account debit to Ram's capital account to Shyam's capital account, and the reserve was 6,000, so it is divided 3,000, 3,000. Apart from that, there is a profit and loss also, which is also 6,000, and that will also be done. I'm doing the same thing. Profit and loss account debit to Ram's capital to Shyam's capital. Here also the amount is 6,000, 3,000, 3,000. I hope you are very clear with this concept. Why 3000, 3000? Because they are equal partners. After that, let us move on to the revaluation. Now you can see the question has stated that there is a revaluation of patent, there is a revaluation of plant and machinery, and there is a provision for doubtful debt which has been created. Now if you see very carefully, it's been given the patents have become valueless. Now what does it mean? The value of patents have become zero. And if you see the balance sheet, the value of patents is given as 2000. So as the value of patent is going down, it will be written in the debit side of the revaluation account, which we'll write just now. So over here, 2 patents, the value is 2000. The next information which is given to us is that the plant and machinery is depreciated by 10%, or there is a reduction of 10%, which is 5000. Is it very clear? So we are writing over there to plant and machinery, because the value is going down 5000. The next piece of information is there is a provision for doubtful debt which is created at 5% on debtors, and the value of debtors given in the balance sheet is 4000, and 5% of 4000 is very simple, 200 rupees. So we are writing over there to provision for doubtful debt, and the value over here is 200. Now there are no other revaluations done. So you can see there is nothing in the credit side of the revaluation account. There are only items in the debit side of the revaluation account which adds up to a figure of 7200, and therefore we can come to this conclusion that there is a loss, and the loss will be transferred to the capital account. So we go to the credit side and write by loss transferred, and over here we have Ram's capital and we have Shyam's capital, and the value will be 3600 for both, 7200 in the outer column, and this concludes our revaluation account. So you can see very carefully that we have completed the revaluation account where there were 3 adjustments which we have just now done. After preparing the revaluation account and getting a loss of 3600, each partner total loss 7200, now we'll move on to the next thing, which is the capital account. If you remember, there are 2 partners, Ram and Shyam, and their capital was 30,000 and 27,500, and the date which is given to us of retirement is 1st of April 2020. So we are preparing the capital account as on that date, that is 1st of April 2020. So as you know the format of the capital account, we have the capital account, the first column is the date column, particulars column, and we have 2 partners, Ram, Shyam. Ram has retired. Over here we know that. Date, particulars, Ram and Shyam. The first entry is the transfer of capital. In which date? In the date of retirement. I have already written that. You can see that 1st of April 2020. I will start with the capital transfer by balance brought down, and if you remember, Ram it was 30,000 and Shyam 27,500. This is the first transfer entry which we have done. The second entry and the third entry are the entries which we had done earlier. If you remember, the journal entries which I had done, internal journal entries for reserve and the profit and loss. So we'll do that by reserve and by profit and loss, and both at the same amount, 6,000 if you remember, and it was equally divided because the partners are equal partners, 3,000 each. So Apart from that, there was also the goodwill of the firm which is given to us on the date of retirement as 10,000. If the goodwill of the firm on the date of retirement is 10,000, individual partners will have a goodwill of 5,000 and the retiring partner will receive the goodwill from the continuing partner. Here there is only one, which is Shyam, and therefore the entry will be by Shyam's capital and 5,000 will be posted in Ram's account. Corresponding entry on the same date, 1st of April 2020, over here to Ram's capital, and we are doing the posting in Sham, that is 5,000. Apart from that, there is a loss on revaluation to revaluation bracket loss. If you remember very carefully, it was 3,600 to the partners. So we have done that. Apart from that, if you remember very carefully, that there was a loan taken to pay off the retiring partner, and we already have 1,000 as a cash balance or a bank balance in the balance sheet, on which will be taken into consideration first, and the remaining amount will be taken as a loan. Okay, so the first payment over here which we are doing is to bank or cash, whatever is in the balance sheet, 1,000, and the rest amount is basically a loan. So to bank loan, we have taken a bank loan and we'll find it out how much it is. So now we'll do the additions. We'll find out the loan and we'll also find out the balance of Sham, who is the continuing partner. So let us add. We have 30,000 plus 3,000 plus 3,000, 36,000 plus 5,000 gives us a total of 41,000 over here. Now 41,000 minus 1,000 gives us 40,000. 40,000 minus 3,600 will give us 36,400. So that is the loan. 36,400 is the loan which we have taken over here. Apart from that, we now go to the Sham and we'll add up Sham, and we have 27,500 plus 3,000 plus 3,000, which gives us a total of 33,500. So 33,500, and Sham is the continuing partner. Therefore, to balance carried down, and 33,500 minus 8,600, if we subtract that, the figure which we get is 24,900. So 24,900 is the balance which which will be shown in the balance sheet of the firm. So after we have prepared the revaluation account and the capital account, where we've seen over here very clearly there is a loan of 36,400 which was taken as the security of plant and machinery to have to be paid to the retiring partner, will now move on to the balance sheet of the firm, where only Sham continues. Now we have come to the last part of this sum. This is sum number 18 of DK Gold, which we are doing, if you remember, and we are now doing the balance sheet of the firm, where only Sham continues as Ram has already retired. So we'll start with the assets and the liabilities. You know, this is the asset side, so we have asset and amount column, and here is the liability side, liability and the amount column. So let us start with the balance sheet. Please see the date of retirement has been written over there, 1st of April 2020, and we start with the first asset, which is plant and machinery, which was given as 50,000, and there has been a decrease of 5,000 to that. So first over here, plant and machinery, inner column, 50,000 less depreciation, 5,000, outer column, 45,000. First entry. The second entry, very carefully see where the patent has become valueless. What was the value of patent given in the balance sheet? It was 2,000 and it has become valueless, so it has become 0. So we'll write over there patent 2,000 inner column and write less, decrease, don't write depreciation over here, because it's an intangible asset. Intangible asset either amortize or decrease. It is not depreciated. Okay, so you can write amortize over here, but we have written a decrease over here. Next, we have the stock in trade, which does not have any impact. It is 23,000 and remains at that. So stock in trade 23,000, no changes. Next one, we have debtors. If you remember, there was a 5% provision created and the value of debtors was 4,000. 5% of 4,000 is 200. So debtors 4,000 less provision for doubtful debts 200. So outer column figure 3,800. Apart from this, there was also cash, if you remember, 1,000, which was used for the payment. So we are writing that cash or bank. I think cash was there 1,000, and write less paid to Ram 1,000, and I'm putting a dash over here. So you can see patents valueless and the cash which has been paid to the retiring partner. So rest less paid to Ram 1,000, outer column 0. Now let us move on to the balance sheet liability side, where we will have the capital and the liabilities whatever they are. So we have first Shyam's capital. If you remember, we had prepared the capital account, and the balance which we had got in the capital account, if you remember very carefully, was 24,900. So over here, Shyam's capital 24,900. If you remember, there was a bank loan taken, okay, to pay off Ram, and the loan which was taken was 36,400. So 36,400, and if you see very carefully, it was taken on the security of plant and machinery. So at bracket you can write security of plant and machinery, or mortgage with plant and machine. That's absolutely up to you. Just writing a bank loan will be more than enough. And after that, we are moving on to two other items which are there. If you remember, we have an employee provident fund of 500, and we also have a creditor of 10,000. So we are writing employee provident fund 500 and creditors, the value of which is 10,000. So these are the four items which are there in the liability side of the balance sheet. There are three items in the asset side of the balance sheet, because the value of two items has become 0. And now we'll add up the asset side and liability side, and on a given date the balance sheet should tally. That is very important. Now let us see what is the total in the asset side, and then we'll go to the total of the liability side. 45,000 plus 23,000 gives us 68,000. 68,000 plus 3,800 gives us 71,800. So total is 71,800. Let us see if the same total is coming in the liability side. 24,900 plus 36,400 plus 500 plus 10,000. So over here we are getting 46,900. 46,900 plus 24,900 gives us 71,800. So the balance sheet tallies at 71,800. So we have concluded with sum number 18. Very soon I will come up with the next sum. Probably we'll do sum number 20. We're trying to do all alternate sums, and the rest of the sums you are supposed to do it by yourself.